Good evening and welcome to Marketplace. Federal Reserve Chairman Ben Bernanke said the U.S. Central Bank is still on track to scale back its asset purchase program later this year unless the economic outlook changes. Bernanke told lawmakers in his testimony that the U.S. job market has made some progress since the Fed began buying $85 billion a month in government bonds last September. He also said the Fed wants to see substantial progress in the labor market before scaling back its bond purchases. But he warned that if economic conditions worsen, the central bank would maintain its current pace or even increase it. Applications for U.S. home mortgages fell last week, driven by a decline in demand for refinancing loans as mortgage interest rates remained at a two-year high. The Mortgage Bankers Association's Index of Mortgage Application Activity, which includes both refinancing and purchase demand, fell 2.6%. Loan requests for home purchases rose 0.5%, while the gauge of refinancing applications dropped 4.2%. Meanwhile, interest rates on fixed 30-year mortgages averaged 4.68%, unchanged from the previous week. U.S. housing starts and permits for future home construction unexpectedly fell in June, adding to signs of a sharp economic slowdown. Housing starts tumbled 9.9% to an annual rate of 836,000 units, a 10-month low. Building permits issued slumped 7.5% last month to 911,000, missing forecast for 1 million. In earnings news, Bank of America reported a 70% year-on-year rise in second quarter earnings, beating estimates. Net profit rose to nearly $3.6 billion or 32 cents per share as the second largest U.S. lender kept expenses in check. Revenue rose 3.5% to $22.7 billion. Toy maker Mattel reported a 24% slide in profit to $73.3 million or 21 cents per share, hurt by weak sales in North America and waning interest in Barbie dolls. Sales edged up just 1% to $1.17 billion. The Dow is now up 28 points. Turning to Europe, Britain's central bank policymakers have unanimously voted against the resumption of government bond purchases. In the first policy meeting under new Bank of England Governor Mark Carney, officials also voted 9-0 to keep the benchmark interest rate at 0.5%. And that's Marketplace for tonight. Thanks for watching.